Hey, good everyone. Good afternoon, everyone. Oh my God, I've even lost my way to speak. You're very welcome to Revenue Hacks. We have been on a break for the last 2 weeks, so it's great to come back today and have financial guru David Lund with us for a really excellent episode about financial leadership. And it's the perfect time for us to be discussing this as everyone's financial year is coming to an end soon and we're all working on them budgets. So we're going to go around the room quickly just to say who we are. So we'll start with the Revenue Hacks team. As you all know, I'm Christina Ridge. I'm Group Revenue Manager at JMK Group. I oversee the commercial aspect, and I'm also a hospitality and tourism consultant. Suzanne.
I'm Suzanne Williams. I'm the Revenue and Performance Director here at Journey in Cheltenham. We are a hospitality marketing agency. We do tech, social media, digital, all things revenue, all things hospitality.
B.
Yeah, I'm B. Brohant. I'm the founder and MD of MyOC. It's a revenue management consulting company helping hotels mainly to optimize pricing processes and commercial strategies, as well as outsourcing, etc.
And finally, not the least, David.
Good afternoon, or it's morning here in the shores of North America, but happy to be here with you. My name is David Lund. I'm coming to you from America, but I'm actually Canadian, so I'm part of the Commonwealth. So happy to be here with all of you today.
Thank you very much for joining us, David. I do know it's very early in the morning for you, so we are super appreciative. If you've got any questions for David today or the panel, please feel free to put your comments into the LinkedIn or else on YouTube, Facebook, or any social media that you're watching us at. And you can follow us also to see behind the scenes on Revenue Hacks online and also on LinkedIn and Facebook and just everywhere. Hey, Davina. Hey, Thomas. Very nice to see you guys here, two regulars here with Revenue Hacks. So let's kick off because we've got loads of questions for David today. David, firstly, can you actually explain to us what exactly is hospitality leadership?
Hospitality financial leadership? Well,
yes.
What it isn't is it's not accounting. So the accounting people do the accounting, but as a leader, as a manager, as someone who's a professional member of our industry, who's upwardly mobile, understanding your numbers and being able to speak that language to the owners and to the brands and to the management companies, that's what's good for business, and that's what's good for your personal prosperity and development. So it's all about being comfortable with what goes on with the money as it finds its way through the financial statement.
And when you're saying, obviously, this is something very interesting because it's quite controversial to say that it's not accounting. Are you saying that the person who is behind the finance is really not a financial controller, essentially? It's more of a person who actually kind of oversees everything on a holistic view?
No, I mean, that person has a very defined role. They're there to produce the financial results, more of a historical look on things. They're there to put together the forecast, the budgets, but they really need all the people in the operation that manage the departments to feed them the information, or else it's actually not very useful or not very relevant, because I can't and they can't sit in their office and dream up what's going to happen in the kitchen next month or the sales department. We need all of the people inside of the hotel to have their game together and understand their financial role.
I love that. I think that's really interesting because that's something we've been saying for quite some time. It's almost stopping the silos and being able to bring everyone together within each department. Why are operational finances such a challenge for hotels, in particular at this moment in time, as people are writing budgets and starting from zero base?
Well, historically, we probably haven't shared the numbers enough. The numbers, the money, it's kind of taboo. It's kind of like that three-letter word that I'm not going to mention. We don't talk about it. But if we want to be proficient with our numbers, we need to talk about it. We need to share the financials. We need to educate our leaders on what they need to be comfortable with and how to, manage and budget and forecast their labor and their expenses. And if they have revenues, to be comfortable with those as well. And it's really not difficult. But in our industry, it's something that historically, we expect the people in the operation to be service focused and colleague engagement focused. And we kind of leave the numbers up to good luck. And if we have a good top line, we'll have a decent bottom line, 19 times out of 20, but it doesn't really work that way. And there's so much more we can bring to the table if everybody has their act together, just like a a great hotel is the sum of all of its parts. Same with the finances.
I think that's very interesting.
Sorry.
Go on, Bink. No, go on.
No, I'm just wondering, because talking about like it's not difficult, etc. But what are then the biggest mistake that you think hoteliers are doing currently, and how can we tackle that?
Yeah, the biggest mistake hoteliers are doing is not getting the department managers involved, not educating them, and not bringing them along. So, a great example would be, if you have an engineering manager who's got a few employees and a couple $100,000 every month in energy to manage and the expenses of maintaining the property. If they're not in tune with what's going on and what the overall objectives are for the forecast in front of us or the budget for next year, then they're lost. And that's not an efficient way to run any kind of a business, especially a hotel where you have multiple departments, big budgets. And, we can generate all the revenue we want, but if we don't bring in the profit, then it's all for naught.
It's a very progressive view, and I think that having the ability to bring all your heads of department into the conversation about finances, especially from a budgeting perspective and forecasting, is forward thinking and progressive. I think there is a reality, and I'm really keen to hear what you've got to say, David, and hints and tips about how you can empower general managers managing payroll, budgets and time to allow their heads of department to do that, because you can have a GM and a strong financial controller that literally controls the purse strings, and then you're just giving dictates out to your heads of department about what they can and cannot spend, especially when it comes to purchasing, weekly purchasing, taking it all the way down to buying toilet rolls and housekeeping. Whereas you can give housekeepers a limit to spend, and then that's the element of control. So what would you advise general managers to do to break the silos down operationally when everyone's pushed for time and you've got a payroll percentage to hit? How do they approach that with HODs?
Well, the best way you can do anything is to get as many hands involved. And my mother used to say, many hands make light work. And when it comes to the budget or the forecast, if I'm that housekeeper and I actually put together my budget and my forecast, and I battle my way through that, and it gets approved at the end of the budget cycle, and then next year, every month, I'm responsible for delivering on the forecast, the rolling forecast, then I have ownership around that. But if someone just does the numbers in a silo and then gives them to me, I'm kind of like this when it comes to, my buy-in and my stake in that game. And that's the mistake that so many owners and managers make, is they make up the numbers and they give them to the team and they expect them to own them and deliver, and it never works. So get the department managers involved from the very beginning. Get them to battle their way through creating their budgets, getting them approved. They'll learn a lot about what's going to fly and what's not going to fly, and then they've got some stake in what's happening.
So, from a culture perspective, I'm guessing when you're talking to any hotels, you're starting with that cultural viewpoint. Where do you begin? What's that first conversation you have?
Well, it really has to start at the top. So the owner and the GM really need to believe that they can do a better job if they have more people involved and if they have a team that's financially engaged. And that's really the secret part of the recipe to begin with, is that kind of culture that they want to create. Now, if the opposite exists and it's a locked down establishment and environment and culture, that's not a place where you're going to get ahead. So find yourself the kind of business that wants to create that kind of a culture from the top down, where they want managers to be implicated and involved. And, it's the key to prosperity in our industry, is to be able to understand the financials and be able to take that with you as you climb through your career.
But do you think there's a good understanding, actually, that very often, whether it's not properly shared or the reports themselves, the statements are not really understood by the team? What's the best way to share that?
Yeah, well, having good financial statements is really important. And, in our industry, we're really fortunate. We have a guide. We have the uniform system of accounts for the lodging industry. It's used around the world. It's our Bible. It's in its 11th edition, and it basically says this is how we present financial information, how it's organized, what goes where. But a lot of people in our industry don't even know that it exists. I would say about 50% of our hotels don't even know it exists. So first thing is get onto that book, get your financial statements organized. I see such lousy financial statements, and it's so easy today with the technology we have to produce really good, powerful, meaningful financial statements that have statistics, that have labor, that have productivity, that have flow through, that have market segmentation, all the things that managers really need to be able to see to understand what's going on inside of their hotel. So, it's just a piece of paper that comes out of the computer, but you can organize it to be a powerful tool if you want to.
Okay.
I think what's interesting is we've all seen how people's P&Ls are, and everyone's P&L is very much the same. It's the same format, it's the same text, and you've got commissions, cost, labor. And, I think each hotel really needs to look at everything a lot more in a better way. But David, when you're speaking about the financial statements, what do you think is missing mainly from hotel financial statements right now? Because I can tell you the book that you're mentioning, not many people actually use this book or probably know of this book. I only found out when we done our prep call with you 2 weeks ago, would be on the call. And I remember kind of going, wow. And I got it on Amazon just so I could actually read it and see what's there, because that's not what's taught in a lot of financial accounting for financial controllers. And in a lot of cases in hotels, accountants are either not qualified 110%, or they're financial controllers that are just very stuck in their ways that they can't see anything apart from what they're looking at in the blinkered approach.
So there's a lot of things that you need to have in your financial statements, but I would say the top three, because we don't have so much time this morning, but number one is organize the information so we can look at departmental results. So we can look at our rooms profit, F&B profit, gross operating income, overheads, and then gross operating profit, and then NOP, so that it's organized according to how the hotel is run by department. Number two is our biggest cost, usually about 50% of every dollar, is labor. So if we don't have good labor statistics, and if we're not recording the hours of work, and if we're not measuring productivity, hours per room occupied, hours per customer cover served, we're missing the boat. You can't manage labor efficiently as a percentage or a cost per occupied room. It's got to be hours per room occupied. And then the third thing is we don't measure flow through. And it's one thing to generate, more revenue this October than we did last October, but how much of it actually makes its way to the profit line? Mm-hmm. So those would be three key characteristics. There are many others, but again, it's all that information is really at people's fingertips. They just need to organize it and present it in a much better light. And that's very, very easy to do.
So it seems that it's not like a top level job. It's actually, in order for the top leadership to perform, you need to make sure that your team and each leaders of each department is fully aware of what's going on. And how do we train them maybe a little bit better on the importance of controlling their department?
You're absolutely right. The hotel is the sum of its parts. It's the sum of the departments. And if all of my department managers are lost, then the hotel is lost. But if everybody has their act together, then we have a powerful team and we can get powerful results. And the way you do that is, every month in the hotel, the window opens and closes. We get to start over again. We get to begin again. It's a new month. And every month we want to be looking at who in our department head roster did their forecast, who actually made adjustments to their purchase orders and their schedules based on the volumes, and who was able to write their commentary, and who was actually able to do it again next month, because the numbers are never going away. It's just another part of our business. And if we train our managers and we start this month and we do it every month from now on, very soon the culture in our hotel will change and people will realize that's just part of my job. And next time when I'm hiring a front office manager, I'm going to drill them on service and their employees, but I'm also going to drill them on do you know how to do your schedule? Do you know how to manage your expenses?
Yeah.
That's just as important, and it's not difficult. But we need to train people, we need to hold them accountable, and we need to also make it fun and make it safe to do that. Because again, a lot of times we use the numbers to scare the crap out of people and to shame them and to, embarrass them, and that's just not useful.
There's really one pertinent point out what you've just said there, David, and for me it is, you can look back at your numbers and you can do your P&L review, but revenue managers, and I think this is the thing for any revenue managers watching, when you forecast accurately and you're forecasting total revenue, rooms, conference and events, weddings, we'll have a wee laugh at that right now, but you're all the way down to your total sales, then you can predict and forecast your costs based on the KPIs and percentages written out in the budget. And if you're involved in the process, then you're going to own that number. I think forecasting your costs is something that hotels, by and large, do not do, and they absolutely should. But the other thing that I absolutely loved, is when you break down your budget properly and you've actually got departmental profit that you can really control. And again, heads of department can feed into that in a really easy way. So you've got your rooms broken down by market segment, sleeper density, breakfast allocations, feeds through to conference, to breakfast and food and beverage. And then all that's broken down. So you know exactly how profitable weddings is, you know exactly how profitable your Christmas bookings are going to be, and everyone actually is informed because they've been part of the process. Love it. That's how it should be done.
When it comes to managing, your payroll, there's one key thing that every hotel should have, and that's a staffing guide where we have the fixed and variable positions mapped out, and we have a formula for every single variable position, and we have an approved list of all fixed positions. And when it comes to expenses, it's great to understand our cost per room occupied, but if you don't have zero-based expenses and you don't know what's in your forecast, so for instance, if I'm budgeting rooms, guest supplies, and if I don't know exactly what's in that account, and I don't have actually like a grocery list of what I'm going to buy this month, if someone says we need to reduce by 15%, what do I reduce? I have no idea. But if I have a list and it's zero-based, I can go back to my boss and say, hey, I'm going to eliminate this, I'm going to reduce this, and I'm going to try and get by with less of these next month. This is how I'm going to manage the reduction you asked for. Because if we do it the other way around and we say we need to reduce, but we don't have a base, then we're kind of flapping in the wind. We don't really have the tools. So we need to create the tools for the department managers, actually have them create them so that they know what their expenses are and they know what their payroll is, so that when we need them to move it up or move it down to manage the flow through, they have the ability to do that.
I've got a question just about something that comes up for revenue managers regularly, and it is about balancing out your room revenue with your food and beverage and the package allowances that you expect your food and beverage departments to control. So by and large, you put together a rate, and it's a package rate where you're looking at breakfast, dinner, etc., etc. Now, as revenue managers, we would be saying quite categorically, you do not put full allowances in, because the kitchen should be able to control their GPs with better control, better purchasing, better wastage, and still make the same level of profit. But that's something that revenue managers get pushed back on a daily basis. Have you got any advice for them about how to tackle that with a turbulent head chef?
Yeah, well, I firmly believe that if we have rack rates and then we have a scale that moves up and down based on the selling rates, and if I'm at rate level 3, which means it's 20% off the rack rate, then 20% off the breakfast package is 20% off the breakfast revenue, and everybody needs to live with that. Rooms needs to live with that. F&B needs to live with that. And if that means that the margins suffer, they're going to suffer in rooms, but they'll also suffer in F&B the same way. But if I do it the other way around and I only let the room revenue go up and down and F&B remains whole, that's not a very balanced approach. It should be on a sliding scale based on the cell level. Everybody should take a hit, and when it's full pin, everybody gets full pin. That's what I think.
It's a bit tricky though, this one, because you'd have, we're doing dynamic pricing definitely in rooms. Breakfast is usually very tight. So you'll have your F&B team saying like, look, I cannot just go lower. You have like different bottom costs.
Okay. The reality is we don't make any profit in F&B anyways, especially when you look at how we measure it using the uniform system of accounts. We just charge direct costs, labor and cost of sales and expenses. We don't charge overheads. We don't charge energy. We don't charge credit card commissions. So they're not making any money anyways. But the reality is that that's part of what the people are paying for to come stay in the hotel, is to have those amenities. But to do it the most efficient way, I firmly believe everybody needs to use the dynamic model, and prices move up, prices move down. And if I need to adjust my offering in my buffet or my breakfast or whatever it is that I'm packaging, then I need to do that. If I can't, well, then the margin needs to suffer. But if we move numbers around to suit people's attitudes, then all we're doing is making the financial statement less useful. The financial statement is there for two reasons. One is so we can measure our results relative to the budget and the forecast to keep score. And the second reason is to tell us where we have problems in our operation and point it out. But if we bury numbers, then we're burying the truth.
I love the way David says that, and I'm going to throw something out there. David's done a prep call with us about 2 weeks ago, and it was really, really good. And he had said something that I think, you know, we're all tied to budgets, we're all tied to KPIs, we're all tied to everything. And the first thing David said was 99% of the time the budget is not right. Even if you're writing it, you can have the right person doing it. And this is where we're going to come into GoPAR, the new RevPAR, because again, this is where, you know, we can't look at RevPAR anymore as a revenue manager. We need to be looking at the total bottom line. We've been saying total bottom line since April on this show. So David, can you let us know what we can do to obviously train our hotels on to look at GoPAR, how to easily explain what GoPAR is, but also what we can do to actually maximize that?
Okay, so every month when you do a forecast, that's just the first part, is doing your revenue forecast. What we want to end up with is we want to have a forecast that gives us the bottom line. This is what we are expecting based on the projections. And the only thing we know for sure about that budget or forecast is that it's wrong. Everything else about it, we could make an argument, but I can tell you right now, I've never seen anybody do a budget that was 100% correct. It just doesn't work that way. It's always higher or lower. But, you know, making up that forecast based on the revenue and based on the cost in detail is what hotels need to do every single month. Because if they don't do that, they're just maybe really focusing on the top level, on the revenues, and they don't actually put together the costs, then they really don't know what the bottom line is going to be. And if I'm the owner, if I'm the bank, if I'm a stakeholder in the business, I really don't care about the revenue. I care about the profit. And when we look at GOP per available room, that's what I should be focused on. Because if your top line forecast is based on so much revenue from groups and so much revenue from leisure and so much from corporate, and that moves up and down, my profit should move up and down according to which is the most profitable segment. And ultimately, I want to gear my business towards the most profitable segment. That if I was selling cars, I would know which car is got the most profit. I would want to sell the most Corvettes. That's how it works. If I'm selling beverages in my bar, I know I make more money selling glasses of wine than I do pints of beer. Okay, sell more glasses of wine. And if we look at our room segmentation the same way and know where our profit is, and drive our marketing activities and drive our business in that direction, based on demand, I will make more money, but only if I can measure it that way ahead of time so that I can then direct the show.
Yeah, I think that's a tricky one though, this one, because it's also where, at least from my experience, we've had some sometimes tough discussions, because you have your number, you definitely have your financial statement that is right. Yeah, it shows that this segment is more profitable. However, this is not necessarily at the right time, or the right business that needs to come, or the one that will bring more business across the year, etc. So it's about also finding the balance, and that's where your point about communications and making sure that everybody understands the big picture is really important from each side. It's not only like the financial there.
And it's a big part of it is the demand side of life. So right now, any hotel is going to take any piece of business that comes through the door that's reasonable, right? But when we're very busy, it's a totally different world. And that's where we really need to understand which segment is the most profitable, move guests or rooms from the least profitable segments out and move in the ones that are the most profitable. But if we don't really understand how that works and what really is more profitable and who's spending more money, because it's not just the room revenue. How much F&B are they bringing us? How much revenue to the golf course? How much to the other things that we sell at our property based on the kind of hotel we have? If we don't really understand those dynamics, and if we're not measuring them, we're missing the formula to maximize profitability.
David, then how can someone such as myself as a revenue manager be that financial leader that actually educates the accounting team or the group financial controller that RevPAR, ADR doesn't really matter anymore? They're not the go-to numbers that we should be looking at. It should be GoPAR. How can a financial coach such as yourself actually train me to be that financial leader to communicate that information across and actually break the silos? Because that is a question we're seeing a lot in our chat just now. I'm seeing a lot of people saying that it is open communication. And obviously, how can they do that?
Well, the first part would be to push the envelope as hard as you possibly can to make sure that you do have a detailed budget and forecast each month, where we are actually having the department managers create and forecast their expenses and their payroll, so that that gets married up with your revenue projections, and we have a real robust forecast each month that we can look back on and go, okay, what worked, what didn't work? Okay, do it again next month. Get better and better and better, and make sure we have the detailed forecast. If we just have a top level statement where you've got nice segmentation laid out and everything after that is just a straight line, it's useless. And then the second thing is for you to be able to really help educate the team on what are the costs of all of the different segments and how do they behave once they're here? How much revenue am I getting from that group customer? How much profitability right down to the actual group itself? Does somebody do a P&L on each different group? Because if they're bringing me a ton of F&B revenue plus meeting room rental plus all the other stuff that goes along with it, it's a great piece of business. I need to be able to do a P&L and show that, and also marry it with the cost. So analyzing each piece of business is an essential part of it. And it's arduous to begin with, but if we make that part of our discipline moving forward, we're not only maximizing RevPAR, we then move to actually maximizing GOP per available room. And just like in the early days of revenue management, we didn't have all the tools we have today, and we didn't have the science, if you like, behind it. Same with F&B and GOP profitability. We need to really drill into it, do the work, but it's all there. It's all right in front of us. We just have been ignoring it.
So who should lead this charge in the hotel? Because as it stands right now, who leads the charge? Who then says, okay, I'm going to set this process up and I'm going to start this change? Who leads it? Because we talk about revenue managers really being commercial leaders. So should it be the GM that picks this up? Should the process start with revenue?
Very, very top. So the owner needs to say, look, we need to have a dynamic organization that understands our revenues and our costs. And we have managers that are plugged into not only looking after our guests and looking after the colleagues, but looking after their departmental results. And I want to train everybody to do that. It's an investment, but guess what? There's a return on that investment. And the great thing about financial leadership is if I start training the managers in my hotel, they're going to come back to me with ideas and ways that they didn't manage before. And I'm going to be able to measure those. So if someone comes back to you and says, I figured out a way to reduce the Sunday morning shift at the front desk. We're going to do things a little bit differently. All of a sudden, they're saving 4 hours a week. There's 52 weeks in a year. That's 800 or that's 1,000 hours a year. They just save, multiplied by 20 quid. That's exactly how we do it. And if everybody has their piece of it, it's all going to come together, and it's something that's very measurable. But if we ignore that part of it and sort of let things happen, forecast the revenues, and then let it go like we always do, we end up with a bottom line, but we don't connect the two. So being able to do that is critical. Start at the top.
I really like how David says you can start a new month afresh every time. I think as a revenue person, we all kind of allow last month's performance to impact on us the whole way through the year. And we kind of sometimes get so bogged down with the numbers and actually trying to achieve the amount that we're missing from the previous month in that particular month. It can become quite, I don't know what way to put it, upsetting. It's not really the term, but also very frustrating, especially during a pandemic and you're trying to now work on your crystal ball. Dave, what would you recommend to hoteliers at the moment who are looking at budgeting right now and are kind of looking at the bottom line, squeezing absolutely everything that they can? You know, they've let teams go, they've let hours go. What can you recommend in this particular moment for their budget process?
Well, we need to be very realistic with ourselves. It's a terrible time for our industry. It's heads on beds and it's a chase to the bottom. We all know that. And what's really going to help change things is when the dynamics in our economies change and we get a vaccine. But in the meantime, it's a great time to rebuild and to start fresh and say, I'm never going to operate my hotel again this way. I want to have a team that in the future understands how to budget and how to forecast and how to deliver on that using the tools of zero-based budgeting and staffing guides and formulas so that we start to build up from this crater that we're in and we come out of this recession stronger than we were before. And if nothing else, that's what we need to learn is we can't operate, high tide floats all boats. But right now, there's no tide, there's no water. So what do? Well, the only thing we can do is rebuild and come out smarter and better than we were before. If we miss that opportunity and all of a sudden it's 2 or 3 years from now, and we've got our top line pretty much back, shame on us for not taking advantage of rebuilding and doing it better and smarter.
Cool. So how do you work with your clients now? What's the process?
Well, I work with them on many different facets. Lots of clients come to me because they want to create forecasts and budgets, and I actually help them create a budget that's zero-based and using a staffing guide and a formula. I actually help them also produce their financial results using the uniform system of accounts for the lodging industry so that they stop looking at their P&L, which is completely useless, and create that departmental one that we were talking about. I also work with individuals who want to be better financial leaders and be able to grow their career. So I do one-on-one mentoring. I do workshops with teams, online workshops where I teach them what they need to know about business thinking, not accounting, about applying the principles that exist in business so that they can become smarter and be able to utilize the tools they have so that the two kind of meet in the middle where we're increasing the sophistication of the team. At the same time, we're putting in better processes and results. And again, we have to remember the numbers are never, ever going away. We need to deal with them every day, every month, every year. So let's begin again and let's figure out how we can do this better, more efficiently so that we can generate a better return, better profitability. And it's intuitive. Everybody knows that if I had a department head team where everybody knows their numbers, I would be a better hotel. Everybody knows that. But how do we get there? Well, we need to invest. What do we want to get from an investment? We want a return, right? So you put money in the bank. What do you want a year from now? You want more money. Well, I'm going to put money into my business. I'm going to train my leaders. And what do I expect? I expect better results in a year. Simple.
Sounds so easy.
I know that's the thing. David actually does make it sound so easy when it comes to actually doing this. The problem is putting it in place when you're actually dealing with people in the offices and the hotels.
Yeah. Well, I love telling this story, but I worked for a GM that he was actually from Scotland, and this was in Victoria, British Columbia, and he was what we would call a hard ass. He was miserable to work with, but he was in the hotel a few short months, and he brought me in and said, David, we're going to do the budget again this fall, but we're going to do it differently. I want every manager in this hotel to understand what's going on in the middle of their departmental statement. And he made them all research and do their expenses on a zero base. He set them all down one by one and went through that. And if he didn't like what you had there, he sent you out to do it again. Same with the payroll. But I tell you, when we finished that budget season, every manager in that hotel knew what was going on. And the next year, we just hit it out of the park every single month. We did a good forecast, and then people were able to deliver on their costs and their expenses. And our GOP went through the roof. And it wasn't that the top line was so much better. It definitely improved, but people understood how to manage their expenses. And our flow through on that additional revenue was better than it had ever been. And it taught me a very valuable lesson that, it really isn't about people understanding accounting, because this guy, he didn't know the difference between a debit and a credit. But all he was concerned was he wants his department managers to be able to manage their payroll and their expenses. It's not difficult. But we have to start somewhere. So we got to train people. We got to make it a monthly thing, and we've got to invest in them, give them the training they need.
Can I just add something into that? Because what you're saying, David, is absolutely right in its simplicity. And I think actually the only thing general managers and heads of department really need is a structure.
Mm-hmm.
And if you help put that structure together, if you say to a head of department that's not financially savvy, okay, let's start thinking about payroll, I would imagine that they'd struggle. Whereas if you give them the tool of the spreadsheet, and this is how it should be laid out, and this is information you have to input, then it's easy.
Yeah, everything starts from the top. And if the head is rotten, then the rest of the body is rotten. But if the head is screwed on straight and they realize that department managers need structure, they need direction, they need training, they need love and support, and that's what we're going to create, then that's what you'll get. And it's a long haul. It's not something you do 1 month and all of a sudden it's fixed. You got to do it every month. Your numbers are never going away. They're never going to be perfect, but it's just like service. Service is never perfect in our hotels, and we come to work every day and climb that mountain. Same with colleague engagement. They never do what we want them to do all the time, but we come to work every day, every week, every month, and we work on it. Same with the numbers. They're never going to be perfect, but they're never going away. So what are we going to do? Got to come to work every day and get on that horse.
I think the favourite one on a P&L is when you have a liquor deficit. That's the favourite. Working out a liquor deficit. When you've got a liquor deficit,
high beverage cost.
No, when you've got a deficit in your liquor stock, so you've got your stock controller comes in, he says, oh, there's £3,000 missing. Where's it gone? Is it wastage? Is it a backdoor policy? Is it purchase orders? Where has it gone wrong? Figuring that out is a really good test for food and beverage to get their head right into the numbers. Was it delivered at the back door? Who signed it off? Was the purchase order correct? All the way through to that sale, line by line. Love it.
Find me a victim. I need someone.
What about the missing A&G stuff? A&G, the mythical, the mythical segment, or sales and marketing, the mythical segment where everything just gets dumped. I call it the dump shop because, I've seen it with P&Ls through the years. No one really has a clue what this particular item is. I'm not going to ask the department what it is, but it's just going to go into sales and marketing.
I have a simple remedy for that. It's a concept that can easily be adopted in the hotel, and it's called every line needs an owner. So you go through the P&L and you assign every single line of cost and payroll and expense to a individual. And it's their job to forecast it. It's their job to make sure that what's in there this month is correct. It's not the accounting department's job to make sure that the financial statements are correct. It's the person who owns the account. Then things start to change. I
agree. Just on liquor deficit, Suzanne, I am minus liquor today. I'm very upset. So that's mine on the bottom of my P&L today. Before we wrap up, does anyone have any other questions for David to do with budget or to do with anything on the financial side? Ladies?
Not a question, but please share all your spreadsheets with all of us, please.
I know someone had a question about how to turn $250 into $1 million.
Yes.
You wanted me to tell you how to do that?
Yes.
Okay. So I actually learned this from one of my clients. I had just finished a workshop, and the GM got up and thanked me, and he said, listen, I want to pay for David's fee today. And what I would like all of you to agree to do is to find $250 in your forecast next month in savings. Just $250. Would all of you agree to find $250? Every single hand in the audience went up. I thought, oh, that's pretty cool. And then he said, well, just one more thing before you go. Would all of you agree to do that every month next year? Find $250? And as anyone knows, if you found $250 once, you just found it 12 times because it's in the same place every month anyways. Every single hand in the audience went up. Well, on the plane ride home that night, on the back of my cocktail napkin, I calculated what just happened. And there were 30 people in that room. So 30 times 250 is $7,500 each month. That times 12 is $90,000 in savings in GOP based on what they agreed to do. And when a property trades, it trades on a multiple of cash flow. So if I'm going to sell my hotel and it makes $1 million a year, I'm going to get $10 million as a sale price using a cap rate. And using a cap rate of 8, we have to take that $90,000 in savings and multiply it by 12.5. That's $1.25 million right there in increased asset value by finding $250 from each one of my leaders. That's how we do it. That's our business, because it's a transactional business. There's, 100,000 rooms sold. There's 200,000 covers. If every one of those attracts, 30 cents less or 2 cents less, that's how the hotel business works. There's no holy grail. It's a little bit here and a little bit there. And if we're looking at it that way, we'll find the savings. But if we're not, the costs will creep back exactly the same way. So that's how you turn $250 into $1 million.
I really hope my financial controller isn't looking at this right now, because he's probably going to be looking for $2 or $3 million instead
If he's
of
smart,
$1 million.
if he's smart, he'll phone you up right afterwards and ask you, where's your money?
If this happens, you were taking over my job for sure. B, do you have any questions for David?
No, I think it was super insightful. Thank you. And I think, it's about not being scared of the numbers and train the team of not being scared, and really teach them how fun it can be, actually, because just by your example, trying to find 250 and getting $1 million.
Who can't find $250?
Yeah. So thank you very much, David, for that.
Hey, you're welcome. Pleasure.
It's been fantastic having you on the show, David, and everyone's been saying how great and insightful it is. Olga, we didn't get to say hello to you. Hope you're okay. One of our revenue hacks, Olga, she actually joined as well today, looking at LinkedIn. So it's been great, and she really enjoyed the session, as did a lot of our people. David, how can people get in contact with you if they've got any other questions or they're actually looking to get a financial coach?
Yeah, go to my website, hotelfinancialcoach.com, one word. And there's a link in there to my calendar. Book a time that you want to talk to me, or send me an email, david@hotelfinancialcoach.com. If you're in the UK or whatever, we'll need to work out the time we can speak. But I have lots of clients in the Middle East and Europe, so that's not a problem. And you can also find me on LinkedIn, Hotel Financial Coach, David Lund. Follow me there. While you're at my website, sign up for my weekly blog. I've been writing weekly blog now for almost 5 years. I've got over 200 weeks of stories and all kinds of really useful information. So go there, sign up, but also read some of the past blogs. There's some tremendous fact-based analysis, and I offer and give away all kinds of spreadsheets. So send me a note if you want some spreadsheets. I'll send them to you. And also on my website, you'll find links to my workshops, to my video course, all kinds of free content, and also valuable things where people can sign up and talk with me.
Great, thank you so much, and thank you everyone for joining us, especially if you took time out of your day on your lunch hour. From myself, Christina, and the rest of the team, we look forward to seeing you soon. Don't be afraid to check us out on LinkedIn, as we said, all the social platforms. This will be up on YouTube later on this evening for your watching pleasure. And just so you know, we are away for 2 weeks, but then we're back in November, and we're actually following on from David's conversation. We're looking at total revenue from loads of different aspects, and we actually have some really good leaders and presenters joining us over a 4-week period. So we're very, very excited about this. And until the first week in November, we will see you all soon. Thank you.
Thanks. Bye-bye.
Thank you. Bye-bye.